Hello, everyone, and welcome to the Essentials of Wise Credit Management. I'd like to start off with a story. This is about Rebecca. She's a young college student. She has a job, but she doesn't have any credit. She wants to get a car and an apartment of her own, but she doesn't know how. So we start talking to her. Turns out that she has one collection which gives her bad credit. She has a buy here, pay here kind of car, and she can't get an apartment because she has about a 500 credit score, even though she has that one collection and it's not even hers. Sometime in the near future, she wants to get married, but her boyfriend has credit issues too. The car lot that she bought her car from doesn't report to her credit, so she's not building credit that way. So now they both have unreliable transportation, they have higher insurance rates, and they can't get a good apartment. So overall, their life is more expensive and less enjoyable. Most landlords want tenants with at least a 600 credit score. Their car is more expensive, their home isn't as good as it should be. Overall, their quality of life is lower because they have bad credit, or in Rebecca's case, no credit at all. Time goes by, 2 years and two kids later, the landlord raises their rent $200. They want to buy a home, but they need 10% down because their credit score is under a 580. And really, 640 would be better, but we're going to talk about that later. So now we've got a young family with unreliable cars, expensive housing that they don't really want to live in the first place. They're not able to buy their own home or build equity. Is that really the American dream? So many people struggle in silence. A lot of people just need help and need knowledge to build their credit, to get good credit scores. A lot of times they can feel embarrassed by not knowing, overwhelmed because the system itself is complicated. You can easily get confused because there's really no one to learn from. One thing that I like to say, credit should improve your life, not ruin it. Well, what if we could change one thing for Rebecca? What if she took Wise Credit Management just like you are? It's 10 lessons that you can take at your own pace, and you can focus on whatever applies to you. I recommend staying involved for at least 6 months, and we have professionals that you can go to for guidance. In Wise Credit Management, we start off by teaching how to get 5 lines of credit, how to dispute any bad credit, how to build your credit score to about a 700 within a year, and Robert can repair and rebuild his credit at the same time. Then they can qualify for a good, reliable car. They can qualify for a good apartment where they want to live, and they can have a higher quality of life. Now, if Rebecca and Robert had taken Wise Credit Management, the 2 years and two kids go by, they're close to paying off their cars if their cars were on a 3-year term loan, and they can qualify to own their own home, which gives them a much higher quality of life. That sounds more like the American dream. One thing I want to stress about credit, you don't actually need to use it, but it will be there when you go to try to apply for a house or a job. And in some states, even insurance rates are affected by your credit score. Back when I was an active mortgage professional, a young couple came to me and they said, "Hey, we want to buy our grandparents' home." And we worked the deal to where they were able to get 20% equity, which was given to them as a gift, basically a down payment. But even with that 20% gift, but they still needed to qualify for the mortgage, and having lower credit scores affected their interest rates. This class is focused on mortgage approval. I teach mainly how to get higher mortgage FICO scores. And the way I see it, if you're focused on the biggest thing that you need to qualify for, the other things won't be quite so hard. I teach how to build good lines of credit, maintain a low debt utilization. We teach how to repair your own credit, and we teach low and zero down options for mortgages. The class will also help with renting a loan, getting lower interest rates on whatever debt you have, getting lower insurance rates, and you'll be able to give wise advice to your friends and your family. Now, most of this class is taught based on principles. You want low or zero balances on your credit cards. You want an inexpensive car that's paid in full within 3 years so that you're not wasting money on interest or depreciation on an expensive vehicle. And we want you to be able to own a good home for you and your family. And learning how to build your credit is like riding a bike. Once you learn how to do it once, it'll serve you well for the rest of your life, and you can wind up teaching your friends and your family and keeping them from making huge mistakes. You can also teach your children good principles and raise them in a house that you want to own. So, our goals for the class are for you to be able to build good credit, handle whatever bad credit is in your past, and get approved for a mortgage. Our graduates will understand how to build, maintain, and use credit wisely, to see good credit as a tool and not an addiction, and to provide understanding and knowledge to the people around them. And in this class, everyone is welcome. Any circumstances, there's no judgment, and you can be any religion or belief. But remember, this is a Bible based class. And throughout the class, I use Bible verses to articulate my point. We find in James, if any of you lacks wisdom, let him ask of God, who gives all liberally and without reproach, and it will be given to him. I hope that you see this class as a gift from God and you're able to use it effectively in your own life to build your own wisdom. Well, who am I? My name is Jason Johnson. I went to Baylor University and got a finance degree. I also went to Texas A&M Commerce and got their real estate agent certification. So I had licenses as a mortgage originator, a real estate agent, and an insurance agent. My focus when I was operating was really first-time home buyers, so I'm very familiar with a lot of the situations that you're going through. I'm also a successful real estate investor, which gives me the opportunity to sit down and put together a class like this. Back when I was an operating real estate professional, one problem that I kept running into was not being able to find a good resource to give people when they have bad credit. A lot of times, first time home buyers, especially when they're young, they have issues with their credit, and it frustrated me that there was really no one to send them to be able to build their credit. Also, within the church, I have found that there's at least one teacher out there that teaches people not to have a credit score at all. As a mortgage professional, I strongly disagree with that philosophy because when you go to apply for a mortgage, if you don't have a credit score, that places you in a higher risk category, which will add up to 2% on your mortgage compared to having good credit. Now I feel called to share with you the wisdom that I've learned over the years, and I was blessed with the opportunity to sit down and create this class. When I finally got my properties paid off, I wound up closing all of my credit cards. I wound up going straight cash. I didn't monitor my credit, and basically, when I got restarted trying to build credit, I had to go through credit building as well. So I sat down and developed the best system for me to develop the best credit scores as soon as possible. Now I'm teaching that to you. So we can add one more item to my little resume here: personal finance educator. The class was inspired by King Solomon's wisdom, Jesus' forgiveness, the need in our churches for factual education about credit. I made it detailed but not confusing, and I show how your actions will change your credit score. My class is completely free for participants, for students, and there is a small fee for professionals to be a part of this class and sponsor it. And we're also partially funded by affiliate links. So, like I said, the class is free for students, low cost for professionals, fairly comprehensive, and highly effective. In this class, I use a lot of screenshots of websites. This one is of my website with all of the lessons on it. One of my favorite verses in this class: trust in the Lord with all your heart and lean not on your own understanding. That has a dual meaning in this course. Sometimes you need to trust the correct words that are put in front of you based on factual information, and you need to be able to trust the people who are teaching it to you. Plus, if you don't understand something, it always helps to have someone to talk to, which is why a major part of this class is the ability to include professionals for guidance. and local groups to have someone that you can sit down and talk to about whatever situation that you're going to, basically for mutual support. And we have a wide and diverse group of professionals: mortgage loan officers, real estate agents, attorneys, both consumer protection attorneys and bankruptcy attorneys, consumer credit counselors, credit repair organizations, financial advisors, insurance agents, tax services. So we're trying to put together the best group of finance professionals to help you in whatever situation you're dealing with. And on the website, you have a directory where you can find someone who's local who you can actually sit down and talk to. I also tried to include within the directory the ability to find reliable and inexpensive auto repair professionals, automobile salespersons, we'll call them handy persons, handymen, home repair contractors, basically the people that you need to help you on your credit journey. And remember, this is a professional member directory, so I don't specifically endorse any company or service. And if you don't want to sit down and call every different professional directly, you can go to wisecreditprofessionals.com and enter your information and a little bit about your situation into a form, and you can have up to 3 different Wise Credit professionals contact you about your situation. Now remember, the first consultation is always free, so there's no obligation to you to use this particular service. Our Wise Credit professionals signed up to be able to help you. And one of the most common credit questions that I get asked: should I actually pay someone to help me with my credit? Well, my response to that is usually something along the lines of, hey, do you do your own oil changes? Do you represent yourself in court? When you're really sick, do you go to the doctor? Well, considering all of that, do you want to handle complicated credit problems yourself? Now, sometimes those credit problems can have legal ramifications, and you can actually find yourself representing yourself in court, or you can get in touch with a professional. Now, one thing that I like to say: I live in the real world. In fact, I just told you I did a lot of this myself. These things that I teach you actually work, and there are real professionals available to help you. Some of these verses, granted, are taken slightly out of context, but you will know them by their fruits. What do I mean by that? Well, several years ago, I started teaching a version of this class in person, and I've had students get back in touch with me. This gentleman had his credit scores increase 211 points and 124 points, basically the first week that he started doing it. And I said, hey, that's great. What all did you do? He said, I had 2 negative accounts removed, and I had my brother add me to a credit card as an authorized user. So I have $16,500 credit line showing with a 0% usage, and we'll talk more about that. He told me to put some stuff on the card every month and he would pay the bill. That would increase my credit score even more. Now, we'll talk about the last parts later on, but basically what he did was take off the bad and put on the good. It was really that simple for him. And you saw how much his credit score increased. And that was just one of my students. Well, every once in a while, I have a student get back in touch with me and say, I need help establishing my credit. I remember this gentleman, he was sitting right up front in the class and still didn't quite get it. But that's okay. That's why I put together Wise Credit Professionals, so that he would have somebody to actually sit down with and ask. And if you're already part of a church group, if you're here because of that, then you've got a group sponsor and you've got somebody that you can talk to about building your credit. And then down there at the bottom, one of my former students, that's the man to go to for sure. I appreciate that. And one of the guiding verses of the class is, wisdom is the principal thing. Forget not wisdom and understanding. In this class, we focus on getting you to the point where you can make wise decisions with your credit because you understand what you're doing. Now, in the lessons, we give a lot of detailed information that you'll need based on what your situation is. Some of it you will need, some of it you won't. But a lot of people just say, hey, give me the summary, give me the bullet points. Well, that's what Essentials of Wise Credit Management is for. I'm about to show you a summary of the main points of the rest of the class. Each lesson begins with a Bible verse. For lesson 1, every prudent man acts with knowledge, but a fool lays open his folly. You know, it's so easy to make mistakes when you don't quite know what you're doing with your credit. So I teach you a lot of things about the system that we use. I teach you how lenders charge interest, but they expect some defaults, and they manage that risk by using credit reports. Credit reports are the main way that a lender can tell who's a good risk and who's a bad risk. And they can also use it to determine how much interest to charge someone. A lot of people want to know who actually decides what your credit score is. Well, we talk a lot about the company called FICO, the Fair Isaac Company, based in San Jose, California. And in lesson 1, you find out very clearly why lenders use that score. Because people over a certain score have less than a 1% chance of default, whereas people under a certain score have over 25% chance of default. So on average, statistically, it is a very good way to determine whether or not a borrower is likely to repay their loan. But of course, credit scores can be wrong, and having no credit score is virtually the same as having a bad credit score. And also, having one error on your credit report can wind up giving you a bad credit score. And one thing that I like to do in this class is address all of the myths and the misinformation. I'll call it the Mythbusters, even though I think that that term might be taken already. But basically, there is a huge amount of belief in certain segments of the society that we have that race, gender, education, they all affect your credit score. That's not true, flat out. These factors do not play any part in your credit score. However, I openly acknowledge that a lack of education and socioeconomic conditions drive the differences in average credit scores when people are grouped by race. Now, one thing I want to talk about is the fact that this class is seeking to narrow that gap by providing the education to anyone free of charge so that everyone who deserves a good credit score can have one. Also, one thing that I want to emphasize, bad credit is expensive. Over here on the side, you can see an increased rent or mortgage payment, $300 a month. Increased car payment, transportation is more expensive. Increased auto insurance. A lot of people don't know, but insurance rates can be affected by your credit scores. And if you have bad credit, a lot of times you have to put a higher deposit on whatever it is you're buying or renting. So the total per month could be $500 a month or more that bad credit is costing you. So in lesson 1, we focus on teaching you how the credit system works, how to make the system itself work for you, and we ask whether or not the system is working for you or against you. We set up goals to make it easier for you to determine what you should do next and give you a basic blueprint for developing your goals using the SMART method. Now, I didn't create this, but it works very, very well. Specific, measurable, achievable, relevant, and time bound. So we're going to set up your goals in lesson 1. You know, there's so much good wisdom in the book of Proverbs, and this is another one. A good name is to be chosen rather than great riches. Favor is better than silver or gold. Well, in our society, a credit report can be the equivalent of having a good name or a bad name. It's your reputation. It's how people in the lending world judge you without even having to meet you. In lesson 2, we tell you how to get your credit report for free. Plus, I walk you through a sample credit report so that you'll understand all of the different details that can be on a credit report, both good and bad. I teach you how to use the various monitoring services that are free. And in lesson 2, we also talk at great length about how to get your mortgage FICO scores. Now, one thing that I want to cover in Essentials, your mortgage FICO scores are the FICO versions 2, 4, and 5. Now, sparing you the details, especially in essentials, those are the industry standard to base not only approval but also interest rates on. And you can get your mortgage FICO scores by going to myfico.com. In other words, the same company that creates your FICO scores is willing to sell them to you. You can go to their website and basically buy a monthly service for $30 a month, but you can always cancel it after the first month. And within that first month, you can determine what your FICO mortgage scores are, as well as all of your other FICO scores. So the way that I would explain it to you is to say that $30 is kind of like an application fee. Maybe knowing your credit scores is just a curiosity, but if you are going to buy a house or if you want to buy a house anytime in the near future, let me strongly encourage you to go to this website and get your mortgage FICO scores. In the verse for lesson 3, like we talked about, Proverbs has so much good wisdom. In this particular verse has so many meanings. Trust the Lord, lean not on your own understanding. In all your ways acknowledge him, and he shall direct your path. I do my best to be able to direct your path along while you're developing credit. In lesson 3, we get far more detailed in terms of what your credit score is made of, the specific factors that are affecting it, and we go to places like the Federal Trade Commission's website for a definition of a credit score. It's a number based on your credit history. And one thing that I want you to know is that each bureau has different information, therefore you have a different score from each bureau. As I said a minute ago, the reason lenders use credit scores, if you have an under 600 credit score, there's a over 25% chance of default. On the other hand, if you have an 800 or higher, the risk is less than 1%. So credit scores are the most effective statistical way to determine whether or not you're going to repay a loan. A lot of the information that we use comes straight from the credit bureaus themselves. This chart from Experian gives us certain categories that could be called exceptional, very good, good, fair, and poor. And it's a very simple way to try to determine about where you are. Now, the Fair Isaac Company actually gives us some of the most effective information that we can use for learning how their scores work. There are 5 main factors. 35% of your credit score is based on your payment history. 30% is based on utilization. 15% is based on your length of credit history. 10% is based on your applying for new credit. And 10% is based on the mix, in other words, the type of different credit accounts that you have open. And a lot of the information that we use in this class comes from the illustrative FICO scorecard. Now we're going to go over this in great detail, but the very top line is your payment history. One thing that I want to articulate from this, one late payment can drop your credit score up to 65 points. Now that impact reduces over time with no additional delinquencies, but it's so important to make all of your payments on time. And at this point, let me strongly encourage everyone to set up a auto payment on their accounts to where at the very least the minimum gets paid on all of your accounts without you having to worry about it. That way you don't wind up with any late payments on your credit. Next is utilization, which is almost as important as your payment history, but utilization is something that you can change very quickly for the good or the bad. Now, utilization is basically the amount of money that you owe compared to the high credit limit that you have. In other words, if you have a credit card with a $100 limit, I know that that's not completely reasonable, but for a practical example, if you have a $100 limit and you spend $10 on that credit card, you're using 10% of the maximum available credit. Therefore, you have a 10% utilization ratio. Well, in this class, we focus on keeping at most a 6% utilization ratio. And really later on, we're going to talk about why 1% is probably the best. But on the FICO Illustrative Scorecard, you can actually see how having a 50 to 90% utilization rate will reduce your credit score by about 40 points. On the other hand, if you want to increase your credit scores fairly quickly, lower your utilization rate. So between 50 and 90% utilization takes off 40 points. And if you go over that 90%, you actually wind up costing yourself 10 more points. So the main point is to keep your credit card balances as low as possible. Now, 15% is the length of time that you've had your credit accounts open. Points increase with the time that you've had to make payments on these accounts. There's a 23-point increase between years 1 and 2, and then 25 more points between years 2 and 4. And it takes over 4 years on an account to get the most points out of that account. Now, 10% of your credit score is based on new credit. Applying for new credit reduces your credit score by giving you a hard inquiry. Hard inquiries stay on your credit report for 2 years, but they only affect your FICO score for the first 12 months, and they affect it the most within the first 6 months. And you can see over there on the scorecard that having 4 or more inquiries could actually reduce your credit score rather dramatically. And last, we have credit mix. Now, this is basically the different types of accounts that you have on your credit report. Store cards are basically the store accounts that can be used at that store. In other words, if you have a Kohl's card that can only be used at Kohl's, that's a store card. On the other hand, bank cards are issued usually by banks or major credit card companies, and they can be used pretty much anywhere. And according to the FICO scorecard, you get the maximum number of points at about 3. So basically, you want 3 open and active credit cards. And we're going to teach you how to get those in the next lesson. In Luke, we're taught, he who is faithful in what is least is also faithful in much. What does that mean? Basically, start small and do that well, and over time, you'll be trusted with more. In Lesson 4, we talk about how to develop 2 term loans and 3 credit cards. And this system works whether you have good credit or bad credit. In other words, if you're trying to rebuild your credit score. We talk about 2 of the companies that I used, Credit Strong and Self Lender, or Self as they like to be called now. They basically offer secured term loans where you don't even have to come up with a security deposit yourself. They just give you an account with the money in it and put a lien on that account until you've paid it off. So you only have to pay a monthly payment toward that account. And at the end, you wind up getting the proceeds of the loan. So it winds up costing you very little in order to be able to build a good credit score. Now, Self Lender also offers a secured credit card. So after 3 monthly payments are made on time and you have at least $100 in your savings built up within that credit builder account, you'll be able to open a secured card. Now, these 2 term loans and this credit card do not require a hard inquiry. So basically, now you have 3 positive accounts without the hard inquiry, without the negative that it's going to take for most accounts to be able to get credit built. So in Lesson 4, we refer back to Rebecca. Now, granted, she's a hypothetical example, but if she has $15 a month for Credit Strong, $25 a month for Self Lender, and up to $200 to make a deposit on different credit cards, she can wind up building 5 different accounts, 2 term loans, and 3 credit cards very quickly. And Capital One is a great place to get your first credit card. They have a good reputation for giving people without any credit a starting line of credit of $200 or $300. And they have the lowest security deposit. If they require a security deposit from you, it's the lowest that I can find in the industry. So at worst, she might have to put down a $200 security deposit to open a $200 credit card with Capital One. And Discover does virtually the same thing for people. So now we've covered how to get 2 term loans and 3 credit cards. That's 5 different accounts open and active. And that's a great place for you to start. And I mentioned Kohl's a minute ago. Kohl's is a great place to go if you have, we'll say, marginal credit, even down to 570 to 640. They'll approve you even if you have collections. So if you're rebuilding your credit and you want something that's not secured, Kohl's might be a good place to start. And we're going to talk about several other options, including Credit One and Blue Sky. And one card that's not in there is Firestone. So, with Rebecca's plan to build credit, within the first 6 months, she'll be paying $40 a month toward her term loans, and she'll have 3 credit cards: the Self Lender Secured Loan, the Capital One card, and the Discover card. And again, we're avoiding a whole lot of details, but it's important to know that it takes at least 6 months of having an account open for FICO to actually create a score for you. So after 6 months of having open and active credit, she'll have about a 650 FICO score, and she'll be well on her way to building a really good credit score and a good credit profile that'll get her the ability to go out and get an apartment and a good, reliable car when she graduates from college. And this is my affiliate link disclaimer. Basically, what I want you to know is that we do appreciate it when you use affiliate links, but I do not give you these affiliate links just to make money on them. In fact, I strongly encourage you guys, when you open your accounts, to spread your affiliate links to your friends, to your family, amongst yourselves in your church groups. That way, you can actually make money while you're building your own credit. And in fact, you may have found this class because somebody referred you with their affiliate links. So if you choose to start building your credit, please use their links and not mine. It's your way of thanking the person who told you about the class, and it's your way of helping them on their journey. And maybe next, somebody will do it for you. And I set up a more simplified version of this class on the website wisecreditmanagement.com/sow. SOW. So you can forward that link to people that you know, people that might benefit from this class, along with your affiliate links. And if they benefit from it, if they want to start building their credit, it'll also benefit you. And your next question might be, well, just exactly how much do you make off an affiliate link? You might be surprised. With Capital One, they give you a $500 maximum that you can earn on affiliate income. With Discover, again, maximum 500. Self, $15 per, and Credit Strong, $10 per. So all of that could easily wind up adding up to $1,000 or more in either credit card statement credits or actual cash payments. So, have you ever taken a class where you actually make money off of being a member? Well, in this class, I tried to design it to where you would benefit the most. In Self Lender, they give you $15 and they give the person that you're giving the referral code $15. And you can see there down at the bottom, Capital One is offering a $150 cash bonus to anyone who opens the account using, and it says your link. But I wanted to show you clearly that I'm using these accounts, and I wanted to show you how it can work for you, because you'll get these affiliate links for yourself when you open accounts with these companies. So you can easily forward the link to the class to anyone that you know who might benefit from it, along with your affiliate links. And finally, back to Rebecca. After 1 year, based on my experience, she should have about a 700 credit score. Now, also, again, clearly, I talk about based on my experience. Most major bank cards want to see at least 1 year of credit history before they'll open new accounts for you. Capital One and Discover are kind of the outliers. They're where you get started. But after about a year, you can start applying for, we'll say, higher limit credit cards. So you can see that it took Rebecca about a year to develop a 700 credit score. Well, the maximum is 850, but the thing is, it takes a long time to develop a credit score that good. Well, that brings us to our next class. The verse for lesson 5, and we use it so many times in this class. Let us not grow weary while doing good, for in due season we shall reap if we do not lose heart. Sometimes it takes a long time of doing the right thing before you get a major benefit from it. In lesson 5, we talk specifically about how to maximize your credit score and specifically how to maximize your mortgage FICO score. Now, some of the various terms that we're going to use. Term loans include things like mortgage, auto, student loans, things with a fixed payment and decreasing debt over time. Revolving accounts include bank cards and store cards. We know what credit cards are. And one thing that I wanted to mention, utilization rate counts for each account as well as all the accounts put together. Both of those are factors. And utilization rate counts for term loans as well. So the longer that you pay a term loan and the closer you get to paying it off, the higher your credit score is going to be. Now, in lesson 5, I focus specifically on 850 credit scores and the people who have them and what they did to get there. Usually, the basic profile is going to be somebody with at least 5 term loans, 11 revolving accounts, a mix of the type of accounts, a low utilization ratio of about 1% on each account. All their accounts are over 4 years old, and you'll find out that their average account is about 25 or 30 years, and they absolutely have no derogatory marks. Now, this is probably my favorite slide in the entire class. Basically, it's so simple. Basically, what I'm saying is that credit scores go up as your utilization rate goes down. Sometimes things really are that simple. As you pay down the balances on your accounts, your credit score goes up, and as utilization rate goes down, your credit scores go up. Guys, if you take nothing away from this class, take that. And one thing that I wanted to mention in the Maximize Your Credit Score class, we get a real world testimonial from a gentleman who actually declared bankruptcy and was looking to go out and buy a house within 3 years of having filed for bankruptcy. You do not need an 850 credit score or anything like that to be able to buy a house. This gentleman recovered from bankruptcy in 2 years, and within 3 years, he was able to buy a new house. This gentleman tells his story in good detail, but basically, I take you through his story and some of the things that he did wrong in order to get there. So you can actually learn from his story, and he does a very good job of articulating some of the things that he did wrong himself. So we learn from his example as a real world testimonial and case study of how you can recover from bankruptcy very quickly. He wound up using an FHA loan, and we'll talk more about that more in lesson 10, to buy a brand new house, a new construction, less than 3 years after he declared bankruptcy. So we're very happy for him. But I also wanted to use him as an example to you so that you know that you don't have to have perfect credit in order to qualify for a mortgage. The verse for lesson 6. The rich rule over the poor, and the borrower is slave to the lender. The way that I want you to see this in your own mind and keep it on your heart, spending on credit is like borrowing from your future self. Your future self is going to have to pay this back at some point. Well, lesson 6 is focused on teaching you how to pay down your debt as well as get a high credit score. The debt snowball is a popular way to pay down debt, and other people teach it quite effectively. The debt snowball is a popular and effective way to pay off debt. Basically, what you do is you start with the lowest account balance that you have and pay that off as quickly as possible. Then you move on to the next lowest balance account, which at that point would be the lowest balance account that you have, and pay that off. and put however much that you were paying toward the account that you just paid off toward the next account that you're paying off. And over time, the snowball itself gets bigger and you can pay off your debt faster. The best thing about this technique is that it builds momentum in your own mind and in your own heart. You see achievements, and that has a huge psychological effect to keep you motivated and to keep you going. However, from a finance point of view, it's not always the most effective. In the debt avalanche, basically what you focus on is whatever account has the highest interest rate. So you wind up seeing what's costing you the most in interest and focus on paying that off as quickly as possible. Then move to the next highest interest rate and pay that off as quickly as possible. And we see from our friends over at Credit Karma, mathematically, the debt avalanche is known as more efficient and cost effective way to get out of debt. Now, like I said at the start, I live in the real world and none of these things are going to work perfectly. But one of the biggest problems that people have is struggling with keeping an emergency fund while paying off debt. So I sat down and created a strategy that takes into account the need for an emergency fund and the need to pay off debt as quickly as possible. And I call my technique wise debt reduction because you're focused on your emergency fund as well as building your credit score as high as possible while you're working to get out of debt. That puts you in the best position possible to go out and apply for and get approved for a mortgage as quickly as possible. So, what I teach you to do is pay off your credit card balance because you can use a credit card as an emergency fund. And usually credit cards have a pretty high interest, so it fits with the debt avalanche. And if you want to start with the lowest credit card balance, it could also work in conjunction with the debt snowball. So in wise debt reduction, you can start with the lowest balance or the highest interest rate based on preference, whichever one you really want to do. But you really should start with a credit card that you can wind up using again in an emergency if you need it. Wise debt reduction is focused on lowering your credit card utilization first, which, as we just talked about, will increase your credit score the most. And remember, like we talked about, term loans automatically raise your credit score over time because by definition, they're working themselves down. But one thing that I wanted to mention, you need to be aware that sometimes credit card issuers will chase your balance down. In other words, basically what they wind up doing is if you have somewhat negative credit, they determine that you're maybe too high of a risk for a specific balance. As you pay down that credit account, they will reduce the limit on your credit account, thereby keeping your utilization rate the same, which doesn't positively affect your credit score. Now, it does help you get out of debt, but it does not help your credit score. So if a company begins chasing your balance with your limit, in other words, reducing your limit as you pay off that card, I would suggest that you start working on a different card that doesn't do that to you because, like I said, you want to use that credit card as an emergency fund. And in this class, I use a lot of, we'll say, hypothetical examples. I invented Curtis and Angela to be our stereotypical couple that just got married, they want to own a home, but they're in debt. Well, what do we do for them? First, I told them to either cut out the cable bill or find some way to reduce their overall cost of living by $100 a month in order to put that to their debt. So starting with month 0, they had a total revolving debt of $5,800 and a revolving debt utilization ratio of 76%. Estimated monthly mortgage middle score, 636. They use $100 a month to pay down their debt, and they had emergency credit available of about $1,500. Now, it took them a little bit over 2 years, but they reduced their revolving debt from $5,800 to $1,300 and increased their mortgage middle score to 724. Now, 720 and above is kind of a significant place based on interest rates. So they wound up in a good position to be able to qualify for a home in about 2 years. And using that $100 a month, they were able to pay off that $5,800 in 31 months, increase their mortgage middle score to about 750, and they wind up with an extra about $200 a month to put toward a down payment for their next home. So lesson 6 walked our couple, Curtis and Angela, through the process of wise debt reduction to go from, we'll say, 630s mortgage score to 750 or so mortgage score, starting with that $100 a month. So the basic principles of lesson 6 wise debt reduction are to pay down accounts that you can use again in an emergency. And you can choose whether to begin with the highest interest rate or the lowest balance. That's up to you. But the key is to stay focused because, like we talked about, good things happen, but it takes time. And in lesson 7, we talk about Deuteronomy. At the end of every 7 years, you shall grant a release of debts. Guys, have you ever heard of the 7 year rule when it comes to credit? Do you ever wonder where it might have come from? I mean, 7 is kind of an arbitrary number. Well, I'm not going to swear to it, but Deuteronic code actually winds up coinciding with US debt law. So maybe they got it from here. In Lesson 7, we talk extensively about what you can do if you have bad credit. We talk a lot about the 7 years rule, but one thing that I wanted to start with was the actual law from the Federal Trade Commission's website. You can go and look up the Fair Credit Reporting Act. Page 26 of the Fair Credit Reporting Act specifically says, well, actually, it starts on page 25. It says that things that can't be included in the credit report include, and it gives a list. Number 4 on that list is, on page 26, accounts placed for collection or charged to profit and loss, which antedate the report by more than 7 years. So that's where we get the 7 years rule when it comes to credit reports. So American law and biblical law are very similar. And granted, it's a different context when it comes to debt, but I think that it's the same sentiment. Now, one thing that I want to emphasize, if you do have bad credit, if you have collection accounts outstanding, you can be sued. It depends on your state's laws and statutes of limitation. We're going to go over all of that. But if it's been too long, in other words, if you stopped paying on an account a long time ago, it can actually be past the statute of limitations in your state. Now, I talk a lot about Texas. I'm from Texas. The statute of limitations is 4 years after your date of first delinquency. Then it becomes a time barred debt. Now, they can still report it to your credit report for up to 7 years, but after that, after 4 years, they can't sue you for it. So, we talk a lot and in great detail about how to tell the difference and the different things that you need to factor in when you go to repair your credit or get these things taken off of your credit. Now, one thing that I do want to mention, especially in this class, there is a moral question as to whether or not you should try to have debts that you legitimately have taken off of your credit report. One thing that I would tell you is that debt collectors have certain rules that they have to follow. If they don't follow those rules, they're in violation of, like I said, their own rules, the laws that they have to follow. And if they're violating those rules, then maybe it's not so bad for you to just use those laws against them to be able to get your situation better. So I wouldn't feel at all bad about taking off something if a debt collector is violating your rights under the Fair Credit Reporting Act. Now, in Lesson 7, I talk about it in great detail, but on the news one day, I saw a story about a woman who basically had a medical emergency, and this isn't her picture, but she basically said, hey, look, if I had known that this particular medical emergency, taking me to the hospital, was going to wind up costing so much money, and the hospital was going to wind up suing us and taking everything that we have and costing my family so much. I wish you'd have let me die. Now, obviously, I hope that she didn't mean that, but her sentiment was that it was so terrible to have these medical problems and the collection accounts that come with them, that it was devastating to herself and her family. And I thought, goodness, there's a way to handle that. And luckily, she was able to handle that with other people who reached out, probably because of the news story. But there are a lot of people out there, maybe yourself, who's going through a similar situation where bad debt winds up being devastating to you, to your family. Basically, the way that I want to explain it is that it's something that you can overcome. It's a bad situation that you're dealing with, but it's something that you can work your way out of. And we have a pretty good little process for taking care of things like that. So if you're in such a bad situation that you have the same sentiment, believe me, bad debt, it shouldn't ruin your life. There's a way to handle it, and we're going to talk about that in lesson 7 and later on in lesson 8. And there is a process for getting into a situation where you've got bad credit. If it's not medical, in other words, if it's a credit card, usually what happens is that you go out and get new credit, you spend money for whatever reason. Usually it's a job loss, medical problem, car broke down, you don't pay it, you wind up with a collection, and that company can actually sue you and get a judgment against you. So there is a process that is fairly uniform. This happens. You're not the first, you won't be the last, but this class will teach you how to deal with it in the most effective way that I know how to talk to you about. Now, like I just talked about, debt collectors have rules that they have to follow. And according to the Fair Debt Collection Practices Act, they have actual laws that they have to follow. So even if you were wrong, even if you do owe the account, you still have rights. And you have the right not to be threatened, not to be yelled obscene language at, not to be repeatedly called to annoy you. The debt collector can't misrepresent the amount or misrepresent themselves as attorneys or government agencies. They can't threaten you with arrest. There is no debtor's prison. And I talk about that in detail in lesson 7, where we did away with debtor's prison. So they can't collect more fees or interest than the contract allows. They can't deposit a post-dated check early, and they can't threaten to illegally take your property. So if they do any of those things wrong, that violates your actual rights, and that's something that you can hold against them. Now, in lesson 7, we also talk about disputing in depth. We talk about where your right to dispute comes from. And again, referring to the Federal Trade Commission's website, the Fair Credit Reporting Act gives you the ability to dispute inaccurate information. So it is a federal right to be able to dispute inaccurate information. And disputing can work. I take you through somewhat detail of a gentleman named Mr. Haddad, who actually wound up winning a case based on a $50 fee. Not the actual debt itself, but a $50 fee. So he made it to where you can actually dispute each individual charge on your bad debt. And that's something that you can use to help you if you are seeking to dispute any bad debt. And frankly, disputing is easier than you think. Again, the Federal Trade Commission gives us on their website a sample letter that you can put your own information in, what your actual name is, and the account that you're disputing, and send it to the credit bureaus. Let me emphasize this: you don't have to buy a dispute letter from anyone. You should, at the very least, be able to have your first round of disputes done yourself to see if you can take this stuff off of your credit report based on what I'm going to teach you in lesson 7. And there is an advanced disputing class. Once you go through the entire class and graduate, you have to go through the graduation class. it'll unlock advanced classes, including advanced disputing or do-it-yourself disputing, which I take you through the Metro 2 format. So this particular class can help you a lot if you need to start disputing things. And until lesson 7, we haven't really talked about other professionals and what you can get other people to help you with. Well, if you do need help, there are some people out there. They have different services that they offer, and we talk about that. Credit counselors basically help you. There should be nonprofit, and they basically help you with budgeting. They help you figure out what you're doing wrong and how to do things right moving forward. And they can also help you set up a debt management plan. In other words, if you're currently behind on accounts but they haven't gone to collection yet, or if they have gone to collection, you can call a credit counselor and have them set up a debt management plan. They will, at the very least, help you stop late payments. They will help you consolidate all of the debt that you're behind on into one loan that's significantly less than what you currently owe, and something that you can make payments on to hopefully have it paid off within 3 to 5 years. So anything that's in debt management, you should be able to have paid off within 5 years. Now, what if you already have collections? It's already too late for a debt management plan, and you're just trying to settle some of those old accounts or dispute them and get them off of your credit report. Credit repair organizations are actually legitimate according to federal law. In other words, there is a federal law that allows these companies to exist, and it sets certain parameters, things that they can and cannot do, and fees that they can and cannot charge. But they are usually for profit. They usually charge about $100 a month, and they usually have a background like myself in personal finance so that they are well versed in the things that you need and the things that are going to help you get out of whatever situation that you're in. Usually they have a separate business entity, and depending on your own state laws, they can either be required to have actual licensing or they can be required to have a surety bond. So really it depends on your state as to how a credit repair organization acts. And frankly, some states outlaw credit repair organizations almost entirely. So you have to actually use a Fair Credit Reporting Act lawyer or what's called a consumer protection attorney. So just keep in mind that you need to deal with your own state specific laws before you contact a credit repair organization. But there are some credit repair organizations that are able to operate in all 50 states because they're owned by a lawyer. So credit repair organizations are legitimate. They charge for their services. And like I said at the beginning of class, most people ask me, do they work? Do they really help? And do I need one? Well, like I said, do you change your oil by yourself? Do you want to represent yourself in court? Most of these guys are professionals. Most of them know exactly what your rights are, and most of them are effective at what they do, but they cannot guarantee any services that they provide until it's been said and done. So be very careful which credit repair organization you go with. Earlier, I referenced consumer protection attorneys. These are actual operating lawyers that specialize in credit law. They can help you with disputing. They can sue under the Fair Credit Reporting Act. They can negotiate debt, and they can help you settle debt. So I know that some of us tend to shy away from using lawyers, but these guys actually are effective at what they do. And in James, we find that we all stumble in many ways. Believe me, that's so true. In Lesson 8, we talk about specifically credit counseling and bankruptcy. We cover in great detail debt management plans, which are good for people who are currently behind on payments. And you can get one of those from a certified credit counselor. We also talk about Chapter 13 bankruptcy protection, which is very similar to a debt management plan, except that it's done through the court system and it can stop foreclosure or your car's repossession based on whatever situation you're in. So Chapter 13 bankruptcy can help you a lot. It just depends on your situation. And Chapter 7 bankruptcy basically wipes out all your unsecured debt, but you have to qualify for it using a means test. And we'll talk more about that in greater detail in Lesson 8. And again, we refer to our real world testimonial of how a gentleman was able to buy a house within 3 years of having filed bankruptcy. The verse that I like to use anytime that you're going through great difficulty, and we show a gentleman who is virtually in every bad situation that you can think of financially. The verse that I like to refer to over and over when he's going through great difficulty is joy cometh in the morning. Now, lesson 9 is specifically about identity theft. And Genesis 27 tells us the story of how Jacob went to his elderly father and said, I'm your son Esau. And he was basically trying to steal his father's blessing and the inheritance. Guys, to me, that sounds a lot like the very first case of identity theft. And I use it to articulate a very real and a very relevant point today. Anyone can have their identity stolen by anyone else. Usually it's either a intelligent computer savvy person you'll never meet or a close friend or relative. And frankly, it happened to me. While I wasn't monitoring my credit, someone else had stolen my identity. They wound up creating accounts that weren't mine, living in places based on my identity, and actually wound up getting a ticket, which is how I got this information. I went to renew my driver's license and was informed that I had a warrant, but I didn't match the description. The description of the individual was a 6'5", 375-pound black male. So I was able to avoid arrest, based on my appearance. But this did happen to me, and I had to learn the hard way how to go about fixing my identity. If you're dealing with identity theft, I give you a very specific formula to go through, a step-by-step way to handle your identity theft case. But number one, if you find a problem, it's time to handle that problem. Don't wait until there's a warrant for your arrest. You need to investigate yourself. There's not a specific task force sitting around investigating identity theft. You have to do it yourself. You have to find out what accounts are effective and notify the fraud departments of those accounts. You have to file a fraud report with the credit bureaus and the Federal Trade Commission and the local police department. There's a lot to do when you've been the victim of identity theft. You also have to dispute those accounts that are opened, and you can keep an extended fraud alert. And believe me, in lesson 7, I talk a great deal about how to protect yourself from identity theft because, like I said, I've been through it, and since I've been doing this, it hasn't happened again. You can freeze and lock your credit reports. You can go to the main bureaus. Their websites actually give you a way to access and take care of your credit reports to where no one can get new credit without you unlocking your credit files. So that's very useful. There are various companies that handle your credit reports. So it's not just the 3 main credit bureaus, but there are also companies that handle rental applications. There are companies that handle bad checks. There are different places that you need to go to opt out of and get yourself a security freeze. And in lesson 9, I take you through all of that. Now, back in biblical days, chances are they were going around living in tents before they actually built a house. Well, in Proverbs, it tells us specifically, complete your outdoor work and prepare your field. After that, you may build your house. Now, he was talking more about getting your affairs in order before you go and worry about your house. And that's what we talk about in lesson 10. Throughout the course, I talk about your mortgage FICO scores, and now we find out specifically your middle mortgage score is the middle of your 3 FICO mortgage scores. So in other words, over here on the right, you can see we have FICO scores 5, 4, and 2. 5 is Equifax, 4 is TransUnion, and 2 is Experian. Now, when they go to price your mortgage, in other words, when they determine what your interest rate is going to be, they use the middle of these three scores. So if your credit scores are like this one over here, this example that I have, 747, 751, and 748, the middle of those three is 748. So even though this person has a 751 TransUnion, the 748, in other words, below 750, is what they'll use, which is okay. That's a very good mortgage FICO score. So don't let that discourage you from applying. But there are different tiers within mortgage credit scoring, and we're going to talk about that in lesson 10. We're also going to talk in great detail about the options that you have and the different types of loans that you can apply for. The VA, and by the way, thank you, veterans. The VA offers a very good zero down payment loan. So if you are a veteran, the VA loan is a great product for you. Conventional loans actually have 3% down programs, and you might be able to get even lower than that with the USDA, which has a 0 down payment loan, but it has to be a rural property. And the FHA is what we kind of focus on, because a lot of you guys will be trying to qualify for an FHA loan, which requires a 3.5% down payment, but it could actually come from a nonprofit. So you might actually wind up being able to have a zero down loan. And just like we took Curtis and Angela through paying down their debt in order to get to a place where they could apply for and get approved for a mortgage, we also take them through the process of getting approved for a mortgage in lesson 10. So we talk about some of the things that they can do within the first 30 days, talking to their lender. Guys, work with a good mortgage professional, work with a wise credit professional who does mortgages and can help you handle whatever difficulties that you've had in your past. And they're going to have some tools available for you to help you handle bad credit if it's, we'll say, an emergency situation. In other words, if you already have a contract on a house, or if you need to close very quickly for whatever reason. And then we talk about some of the things they can do 30 to 60 days away from closing, such as paying down revolving debt, asking for a credit line increase, and adding an authorized user. And if you'll remember, it took Curtis and Angela quite a while to work their way out of debt. But if you have 2 to 6 months, you can definitely increase your credit score. And I do offer, we'll call it a bonus lesson on automobiles. Now, this class is mainly focused on getting you approved for a mortgage. And one thing that I want to emphasize to you guys, some of you are thinking the wrong way about a car. It really should just be for transportation. The thing that I want you to think about is what's more important to you, having a new car in front of your apartment, or an old, small, ugly car out in front of your new house. So the way that I want to describe it to you is a cash car is a wonderful thing when you're trying to apply for a mortgage. A reliable 10-year-old car costs about $5,000, or I'll say 36 months of payments at any interest rate is better than a $50,000 car plus insurance for 5, 6, 7, 8 years. However long you wind up having to pay for that thing, you're burdened with that. And an old reliable truck would cost about $10,000, and 36 months of payments at whatever interest rate is better than a $75,000 loan. So guys, if you want to own a home, you have to decide what's more important for you. Like I said, a new car in front of your apartment, or an old, ugly, beat up car that just gets you to work and back, and to and from the grocery store and to and from church. But that car can sit right out in front of your brand new home. And now I want to introduce you to the class mascot. We're going to call it the Golden Nugget. Basically, this car, I'm going to tell you the whole story in lesson 1, but basically I went from owning an older, we'll call it an older truck. I had owned it since it was brand new, and I miss my Chevy truck, but driving around in Dallas, You sometimes want something that's smaller and more maneuverable. Well, I went and got we'll call it a throwaway car. I mean, look at it, it's nothing special, but it always starts and it always runs. And it cost 2 grand. Now I had to put about $1,000 of repairs into it, so a total of about $3,000. And I put away about $100 a month in maintenance for it, and it costs maybe 100. It's not even $100 a month in insurance. But basically, this car, and I walk you through it, this car saves me so much money that I don't have to spend because I don't have a huge ego when it comes to what kind of car I drive. And the way that I want to explain it to you is if I'm willing, guys, obviously I can go out and buy pretty much any kind of car within reason, any kind of car I want, but I choose to drive something that's a little bit less. In fact, it's dramatically less, but it's reliable and it's inexpensive and it gets done everything that I need to do. It, it doesn't look like it, but it can even fit a ladder in the trunk if you lay down the back seat. So guys, this car does everything that I need it to do for 200 bucks a month. So if I can, we'll say, humble myself to drive a vehicle like this, like the class mascot, you guys can humble yourselves as well in order to buy or in order to be able to qualify to buy your home. And like I said, once you go through all the classes, you have to be signed up on the website in order to be able to go through the classes and graduate. You'll have access to advanced lessons, including do it yourself disputing, the wise path to wealth, insurance credit reports, or clue. And that's a whole nother animal. It requires a whole nother lesson in and of itself. And there's also a certification class if you want to teach the class. So I talk in great detail about not only my story, but about how much this car can actually save. And in the Wise Path to Wealth lesson, I talk about the other things that you can do with the money that you save. In other words, I'm not spending money on a car. Well, that means that I have money to put other places. And in the Wise Path to Wealth, I talk specifically about how you can put your money to work and wind up building a really good rental portfolio just using several basic techniques that I talk about. And I want to reiterate that all of this is free for you. And what I ask is that professional members pay a small monthly fee to be a part of the class. So you've already seen that in this class we use a lot of biblical wisdom. If there was a main verse for the class, I think it would be that wisdom is the principal thing. Forget not wisdom and understanding. Also, plans succeed through knowledge and wise counsel. Well, where do you get that knowledge from? Factual information. In other words, I dispel a lot of the myths that are out there and show you nothing but facts. Two of the verses that I keep referring to, one is, keep your tongue from evil and your lips from speaking deceit. I hate misinformation. It drives me crazy because it leads you to make the wrong decisions based on the wrong information. And I also emphasize that teachers shall receive a stricter judgment. Basically, I hold myself to a much higher standard because the decisions that you make are based on the information that I give you. And if I give you the wrong information, you'll make the wrong decisions, which negatively influences your life. Therefore, I focus on factual information. I focus on being right in everything that I teach you. And the way that you know that I'm right is that I use a lot of screenshots from the actual companies that are kind enough to share with us the exact information that they use and how they use it in your credit score and your credit reports. Now, some of them aren't quite all that helpful when it comes to disputing, but they can be very helpful in terms of figuring out how they operate so that we can figure out what the right decisions to make for us are. One of the companies that I repeatedly refer to, their website, myfico.com, is the Fair Isaac Company. This is the company that actually determines your credit score. So why not get as much information out of them as we can? And we do. Like I showed you before, the FICO Illustrative Scorecard, a lot of information comes directly from their website. These things are facts and we can rely on them because it comes from the company that creates the FICO score. Also, I use screenshots from the credit bureaus themselves. Like you've seen, Experian, I also use TransUnion and Equifax. And I show you the actual website address so you can go and take a look at that website for yourself. And as I showed you before, we use the Federal Trade Commission's website to get, among other things, sample dispute letters. So these are all useful resources, and I put them all together in this class for you. And like I said before, plans succeed through knowledge. We've talked about knowledge and factual information and wise counsel. You can get wise counsel from professional guidance. So in this class, we've got professional volunteers, people who will come to your group meetings and sit down and talk to you face to face about whatever you're going through. I encourage real estate agents and mortgage lenders to come, credit counselors and credit repair professionals, attorneys, auto lenders. Guys, like we talked about, I encourage you to get the least expensive, reliable vehicle that you can. And our automobile sales professionals, at the very least, understand what you're trying to do. If they're part of this program, they can help you get a good, reliable car, we'll say inexpensively. Now, I strongly encourage you guys to set up your own church groups. There's no recognized format, there's no specific anything that you need to do to have a group meeting. Two or more people gathered together to share information, but I strongly recommend that you have a professional either leading the group or there to answer any questions. But guys, getting together and talking about whatever you're going through helps to support, and participation and sharing helps the group grow stronger. And one thing that I want to emphasize, we celebrate success. Things that happen that are good, we want to emphasize those. That means that you're on the right track and you're doing the right things. In a church group where you can sit down and talk to like minded people about what you're going through is a really good way to attain a lot of good things out of this class. So, like we talked about, I already have a fairly impressive resume and I've experienced good success in my financial life and my professional life. A friend of mine, when I talked to him about developing this class, he asked me what my motivation was. And specifically, why are you making this to benefit church groups? Well, this goes back a long time and some of the things that are deeper inside of me, but I had a extraordinarily difficult childhood. And through that period of time, goodness, it was at times luck or divine intervention that I made it through. And certainly I had a guiding hand getting me where I needed to go. And to be in the position that I am grateful to God and I'm grateful to all of the people who helped me get where I am. Most of those people are actually members of the church. One verse that I like to refer to over and over when people are going through great difficulty, and one thing that you have to learn through life experience. Psalms 30, verse 5 teaches us, "For his anger is but for a moment, his favor is for life. Weeping may endure for a night, but joy comes in the morning." In my youth, I had to endure a lot of difficult things, and God helped me get through those. But God wasn't alone. What went into making the Wise Credit professional? Guys, when I was young, a child, unfortunately my family passed away, but I had a lot of help. I still remember how nice and kind the people from the church were. And I remember the volunteers that came to help us in a time of need when my father was sick and dying. I still remember the look in the volunteers' eyes when they were delivering some food for us. Things like that deeply affected me, and it always makes me remember that there are good people in the church. Now, obviously, these are stock photos, and I use a lot of stock photos in this class, but you get the idea that the church was there for me, and part of me feels an obligation and a calling to use my knowledge to help members of the church who certainly aren't as well versed in credit as I am, to teach them how they can get a good credit score and teach them how they can succeed and have a better, higher quality of life. So when you ask why I'm making this specifically for church groups, really, there are a lot of people to thank in my life for my success, including God and the church and teachers. Guys, my mother and my grandmother were both teachers. Not only that, but the teachers, while I was going through that great difficulty, they were kind of like surrogate parents because I had lost my mother before that. So, goodness, put up with me. I could not have been easy at all to deal with. If any of you out there are teachers, I was that one. But I'd sit in the back of class and I'd only say something if I disagreed. Yeah, I was that kid. But now that I'm older, obviously, and I have something to say because I disagree with some of the things that are being taught in the church about personal finance. I'm still that kid, but I'm doing it in a very constructive way. But guys, teachers, I am so grateful both to my teachers and to the teachers who are currently active and trying to wrangle kids like me. And guys, I'm also thankful to veterans. My father and both of my grandfathers were veterans. So, we had a lot of help from the VA, but I also had college professors who were veterans. At Baylor, they have a history of hiring veterans. So there are a lot of good people that I was exposed to. Also, I had supervisors and coworkers who were veterans. Sparing me the details, I'm sure some of you can kind of see the structure and the order that I put into the class and see where some of that structure and order comes from. And I've had quite a few friends and a few family members who are veterans. So I am grateful to the great influence that veterans have had on me, and part of my way of thanking them is to create this class and make sure that they have a resource that they can go to on how they can build credit. And guys, if you're a veteran and especially if you're currently active and you don't have the best credit while you're in the military, that happens. Don't worry about it. Take the class. You'll be fine. And one thing that I want to articulate is that God really was with me in developing this class. I am not a computer guy, clearly. I am not a video guy. That's more obvious than anybody wants to admit. But I'm still here doing this. You know, back when I first started, like I said, I started teaching classes in person, but I was really looking for something important to do. It was just more or less a service to the people that I was around. But I was praying about it, and I said, there must be something more that I'm intended to do because I don't want to continue in retail real estate. Well, it came to me, it was put on my heart that I always wanted there to be a class that I could send people to help them when they have bad credit. And that desire, the thing that was on my heart, soon became a class. And like I said, the website was very difficult for me to build. I'm an introverted finance guy sitting here teaching videos, but I overcame all of that to be able to present my wisdom to you, and I hope that you benefit from it as well as possible. So when I teach, I think about you sitting at home or watching this maybe with a group of people, but I think about the volunteers and the look in his eyes. And now, put forward 30 years, I think about the idea that people who volunteer in the church could also use some help with their credit. Maybe they're going through some stuff too, and helping others is their way of coping with it. I'm so grateful to everybody who helps other people. I'm helping you by doing this, and you're the people that I teach to, you and teachers and veterans. So take this as me giving back to you. And again, my gratitude toward teachers is immense. There's only so much that I can do making website videos, but if there are specific things that you're going through, I know here a few years ago, teachers had to go through, in fact, it might not have been a few years ago, but I remember teachers had to fight for the debt forgiveness that they were rightfully owed. Things like that irritate me, and I wish that I could stand up more for you guys. But if there are specific issues that you guys are facing, at least let me know about them and see if I can put together a class that would help you out specifically. Also, veterans, guys, I am so grateful to the U.S. military. My father was Army, and my grandfather's, one of them was Army and Air Force at the same time, but that's a different story. Guys, I am grateful to the military and those of you who are currently serving. If there are any individual things that you're going through, try to let me know about them and I'll see what I can figure out. There's only so much that I can do for you, but I'll do my best for you guys. The way that I like to see it and the way that I like to say it is that I serve through my profession. Corinthians tells us that there are diversities of gifts, but the same Spirit. There are differences of ministries, but the same Lord. And I kind of take that to heart that this is my thing, so to speak. I understand this a great deal, and I'm willing to put the time and effort into putting these classes together for you guys. So, this is my gift, and I'm trying to give it as well as I possibly can. Basically, I see my knowledge and my skills as a gift. So the ability to teach, like I said, it came on my heart to put this together, and I take it as a calling. And I'm doing my best to give back to the good people in their community who are also people who maybe not directly, but in a very real way help someone who is just like I was back when I needed the help when I was a child. The Lord expects us to be productive with the talents that He gave us. There's a longer story to it, but that's the basic emphasis of Matthew 25, verses 14 through 30. And obviously, my talents gear toward the finance side, and I chose to go into real estate. So, credit is something that I know obviously quite well. And frankly, it upsets me that people are being taught not to have a credit score. I'm not naming names specifically, but frankly, as a mortgage professional, I strongly disagree with that philosophy. A no score mortgage, even with 20% down, can wind up giving you an interest rate on your mortgage that's up to 2% higher than if you wound up taking the time and getting a few credit accounts and building your credit to where you could apply and get a much better interest rate. In the beginning of this class, we talked about how having a bad credit score could wind up costing you $300 a month or more. Bad advice can wind up costing you real money. And again, we go to MyFICO's website. Guys, interest rates change every day, sometimes hourly, but the spread remains the same. There's a difference of about 1.5% if you have a below 640 versus above 760. So those 120 points can make all the difference. On a $300,000 loan, well, what if your house costs more than that? You're going to wind up paying more. So this class was designed specifically to be taught within the church by people who know what they're doing, and they can give you somebody to talk to about whatever situation you're going through. As professional members, We call them wise credit professionals, basically personal finance professionals and in other relevant industries to home buying. Basically, these are guys who can help you. Maybe they actually go to church with you, but they are willing to serve through their profession. Now, when I first created the idea of the Wise Credit Professionals, like a good Baylor business student, I sat down and created a fairly solid mission statement. But really, what the mission is, we serve through our profession. And for those of you who are familiar with the purpose driven life, Rick Warren also wrote The Purpose Driven Church. You know, so much of my inspiration came from this particular book. I know maybe he's not quite as popular with some people, but I feel it's okay to quote him directly. But he says, if you'll concentrate on building people, God will build the church. And I'm doing my best not only to build your knowledge, but also a group of people who are knowledgeable to help you. And straight from one of his sermons, in fact, I give you the specific or the specific information where you can go and find this particular sermon. Why he doesn't post them himself, why it has to be a Chinese community, I don't know. But on minute 40 of 52, Rick gives us a story about how he and Dan Cathy were going to visit one of the new Chick-fil-A sites. And instead of, because the Chick-fil-A wasn't quite built yet, they went next door to Taco Bell. And Dan Cathy was washing his hands. Keep in mind, this is the CEO of an incredibly successful company. And he actually washed the sink at the Taco Bell restaurant. After he was done washing his hands, he washed the sink. And the way that Rick tells it in his sermon, he says, Rick, we teach our staff to always leave any place they're at better than it was when they found it, whether it's our place or not. And I really think that we can take that to heart. The Wise Credit Professionals have several guiding principles, one of which is we offer our wisdom to leave a person better than we found them, whether it benefits us or not. Guys, if you do need help, ask these people. They're willing to help you. They all will give you a free consultation. They'll all give you freely from their knowledge and try to help you in any way that they can. And Billy Graham was such an inspiration to a lot of people. One of the things that he said was, a suffering person does not need a lecture, he needs a good listener. Well, Wise Credit Professionals are people that you can go to and actually talk to, and they'll listen to you because they serve through their profession. And like I said before, these are real people that you can go and talk to. You can find them either on the Wise Credit Management website. There's a professional directory and a map that you can actually go to and search for the nearest people. Or you can go to wisecreditprofessionals.com and enter whatever information that you have, whatever situation that you're going through, and let up to 3 of the Wise Credit Professionals get back in touch with you and talk to you about whatever situation that you're facing. Now, I'd like to take a moment and talk specifically to leaders of the church, whether you are minister or reverend or deacon. I'm grateful to be a small part of your ministry. I'm doing my best to fill the need for an education relating to having good credit. And I tried to show very specifically how having good credit versus bad credit can affect someone's life, especially when they're young. I try to teach facts and principles and best practices. And really, I hope that Wise Credit Management turns out to be a great resource for you and for your church to help the people in it. So I'm grateful just to have your time and have an opportunity to serve your church members. Well, how do you find a church group? The first thing that I want to encourage everyone to do is complete this class on the website. If you have a church group who referred you to the site, you can join their group on the website. You can also start a message board with just the members of that church on the website. You can also attend monthly meetings in person for support. Guys, participation and sharing of your personal experience is so important, and it's also important to celebrate success, even if they're small. Step by step, you'll get there. The class is built so that it fit inside of or be taught in conjunction with another personal finance class. I'm not territorial. I'm completely open to however you want to use this particular class, but it can be taught by itself or in conjunction with another personal finance group. So it's completely up to you. Now, group organizers, group sponsors, however we can refer to you, you guys are responsible for organizing and operating the group. Hopefully, you guys are going to be able to recruit a team of, we'll say, professional volunteers. In other words, Wise Credit professionals. Now, it can be anyone. I want there to be at least one professional, one real estate agent or uh, someone of the industry, but a group organizer themselves can be anyone, whether it's a real estate professional, a teacher, a minister, someone who's committed to teach and serve their community. And one thing that I really want to emphasize, guys, God uses flawed people to accomplish his purpose. Look at me, for example. I have no idea how to set up a website until I sat down and did it. I had no idea how to do web videos until I sat down and did it. And some might argue I'm not any good at it, but here I am and here you are. So if God is using us to accomplish his purpose, then we're flawed, but we're still doing what we're doing. And one more thing with group organizers, if they offer you their affiliate links, please use theirs. I am not at all selfish when it comes to affiliate links and the $10 or $15 or whatever it winds up being. If you can make some money, if a group organizer can wind up making some money by teaching this class, that's wonderful, and I'm so happy for them. So if it gives you a little bit of money in your pocket to spread the word and to help other people, then that's wonderful. Now, there are some rules that I want everyone to follow. There's very little structure, but there are some basic rules. No judgment. If somebody's in pain, they need support rather than judgment. In fact, back to Billy Graham, a suffering person does not need a lecture, he needs a good listener. Hopefully, this can be a safe place where you can go and talk to somebody about whatever you're going through. Remember, Jesus tells us it's not the healthy who need a doctor, but the sick. Now, the second rule is very important. This class is education, not advice. I can't give you advice. This is a web video. I'm giving you information and education. So, this is not advice. Also, this class works well for most people, but it's not going to apply to every specific person or every specific circumstance. I strongly encourage you to share your experience. You never know when what you're going through is going to help inspire someone else or at least help comfort them. And in this class, we stay on topics focused on credit. In other words, if it doesn't go on your credit report, maybe you shouldn't talk about it here. And obviously, please forgive the finance guy for his low tech skills. We're going to make that a rule. And also remember, this class, like everything else, is a work in progress. I ask for your patience. If things aren't working correctly or if there's something that I need to be doing better, let me know about it, but also be patient. Uh, Also, try. Give your best toward doing the things that I teach and the principles that I present to you and find out whether or not it works. Also, comment. Let people know that this worked for you, or say what didn't work for you, and keep coming back. There are going to be more things and updates. As questions get asked, I'm going to present answers that you might need the answers to. And I'm going to try to improve the website over time, but I'm probably also going to wind up bringing a professional in to help me out with that. Now, there are always going to be, I'll say, trolls and discouragers, but remember that Satan always has something to say. And we saw that with Eve in the Garden of Eden, we saw it with Job, and we saw it with Jesus in the desert. Satan always has something to say, so try not to pay that much attention to him. Trust the facts. Know that every situation is different. Ignore people who discourage you. Stay focused on the content and your path. And remember that true believers serve God and their community. And if someone is a troll or a discourager, remember what Proverbs says about them. A scoffer does not love one who corrects them. He will not listen to wisdom. Now, a few things about professional members. They need to be either licensed or operating legally. There are a lot of different things that you need to do in order to be a professional member. You need to have a commitment to teach and to serve the community. You need to be willing to give one free professional consultation. In other words, wherever they work, that's where you should probably sit down with them one on one and talk about your situation. But all statements made within a group meeting are for, we'll say, their opinions and education, not advice. Go to the professional's place of employment for actual advice. And keeping with that same sentiment, note that I am not a credit repair organization. These videos in this class is for commentary and information purposes only, and all views expressed are my own and my opinion. And frankly, under no circumstances shall this company, its affiliates, partners, suppliers, licensors be in any way held liable for the situation that you're going through. We are trying to help you work your way out of that, and I assume no liability or any type of responsibility for the education that you get on this site. Now, like we've already been sort of introduced to, I use video classmates. In other words, I use cliche people about common situations. They're stock photos, but it illustrates how you can handle these real world situations. We've already met Rebecca, 20s something. She's in her 20s. College student. She wants a reliable car and an apartment sometime soon with no credit. And frankly, when you're young and you don't know what you're doing, you can feel lost. And we've also met, in a way, Curtis and Angela. They want a home, but they owe a lot in debt. Remember, they had over a 75% utilization ratio, so their credit score was pretty low, but they feel hopeful. Oh, and this is my guy, Charlie. I sat down and created a guy that was going through pretty much every difficult situation that I could think of. Divorce, medical problems, job loss, behind on his bills. He has maybe a 500 credit score. He feels overwhelmed. Just think about all the things that you are going through if you are in such a terrible financial situation. It's probably reflective of the real world things that you're going through and not just a credit score. So if you're in this situation, one thing that I want to emphasize to you, we're going to take you through, especially with lesson 7 and lesson 8, but we're going to take you through the options, the things that you can do. But just remember, joy cometh in the morning. And we're going to call this guy, we already kind of know that he's Rebecca's boyfriend. But if there's a visitor, if somebody comes, if they just hear, oh yeah, it's Wise Credit Management, but has no context for what we're doing here, has never seen the videos or the website, I would say welcome any visitors, kind of putting their toe in the water, so to speak, but ask them to follow whatever group rules that we have in place and to just benefit from our presence. So we're very welcoming to visitors, and we'd also encourage them to take the class. And like I said, Wise Credit Management is 10 lessons. It also has quizzes. The quizzes are not built to be difficult, they're built to reiterate the main point that was given in the lecture. homework or exercises that you can do specifically to benefit your situation. They're things that you need to focus on after having been presented the material, so it's not graded or anything like that. Certificate of completion, upon completing and graduating from Wise Credit Management, you do get a certificate of completion, but more importantly, you get support through monthly meetings. And keep in mind, during the monthly meetings, when you first come, meetings 1 and 2, in other words, months 1 and 2, you're just getting started. You're just learning what you're doing. So don't be surprised and don't be discouraged if you don't see anything right away. 3 and 4, you should probably start seeing results. In other words, 3 and 4 months into the class, if you implement some things, hopefully you'll have some good improvement by then. Months 5 and 6, hopefully you'll see that you're definitely on the right path. And I encourage people to keep coming after 6 months because it can encourage other people to keep going. And remember the serenity prayer from Reinhold Niebuhr. Forgive me if I didn't pronounce that name right. God grant me the serenity to accept the things I cannot change, the courage to change the things that I can, and, of course, the wisdom to know the difference. We have certain beliefs in this class that we try to focus on the wisdom of changing what needs to be changed. We know that good credit comes from doing the right thing for a long period of time, in other words, building credit history. And having good credit is not an addiction to break away from or use scissors and cut something up. That's not what we're trying to do here. And frankly, not knowing how to get good credit is like a penalty. It's like a tax. It's like a fine. It could wind up costing you $300 a month or more on a mortgage. And one thing that I wanted to mention is no score mortgages. In other words, if you don't have a credit score at all, it's priced basically as if you had a 580 credit score. Is that what you want? So, like I said, there's homework. Make a commitment to yourself and to the people that you care about. A lot of times, telling somebody what you're doing is just as important as telling yourself that you're going to finish the class and take action. Sign up on the website, join the Facebook group, subscribe on YouTube, get involved. It's going to help you. And in our community, we celebrate success. If you're watching this on YouTube, please remember, like and subscribe. You can see how terrible I am at that, so bear with me. But guys, I tried to set up social communities within the major platforms that are available. So please feel free to reach out and join us wherever you feel comfortable. And like I said, I tried to make the class as easy to share as possible. So if you text somebody the link to the class, just say, know anyone who needs this? And I end all of the classes with a preview of the next class. So, next for you is going to be lesson 1, the system. And like we talked about here in just a few minutes ago in Essentials, bad credit can be expensive and it'll wind up costing you up to $500 a month or more. We talk about lending, we talk about how risk is determined in lending, and we talk about how all of that affects your interest rates. We talk about what's not a factor in your credit score, including race, income, and surprisingly, your bank account balance. So, guys, I can't wait to see you in lesson 1, and I'm so grateful to have your time and your attention. Thank you so much, and may God bless you on your journey.